Hello and welcome. So in this video I'm going to show you various strategies that you can use to raise a small account and even a big account. You can still use that same strategy in order for you to be profitable. So stay tuned and make sure you watch the video to the end so that you can gain this free information on how to manage an account. So don't forget to subscribe, hit the notification bell so you don't miss on any important update that I'm going to post. So without wasting much of your time, let's jump right into it. So I'm going to start with a 36-cent account. So it's not every day that I raise a small account to thousands. Sometimes I fail, sometimes things just go against me. I am a human being, it happens. But then what's important is that you learn the strategy. So right now I'm currently drawing a fair value gap on the drift switch index 10. So the fair value gap is usually a gap between the next and the previous candle after a very big move. So it's marked by that big candle. We mark the difference between the close of the last candle and the opening of the next candle. So basically that's how we identify a fair value gap. So a fair value gap is important because it acts as a major resistance line or a major support line depending on the price that you're currently on. So basically at this point there was a fair value gap, and also there was a resistance, or rather a support, that the current price is at. So basically that resistance, that support rather, shows that the market is not just going to pass by easily. So right now we are looking for buy signals, because basically we know that the market is currently at the support line, and also as marked by that lower Bollinger, the market is at the resistance, at the support. This is known as the Bollinger Bounce. So a Bollinger Bounce is basically when the price hits the lower or the upper Bollinger and then it retraces back towards the middle Bollinger. So this is just basically the standard deviation being subtracted or added to the middle Bollinger. So I've explained how to use the Bollinger Bands, and then as you can see, the market went against me. I'm actually in loss. It's not that much because this is drift switch index, so I don't think I can be worried that much. But however, as you can see, there was a very long wick to the downside, which means the market is going to buy. But however, it's not important anymore because this account is dead anyway. So these wicks is marked by that arrow, shows that the market is being rejected quite a number of times, which means the bulls are actually going to be in power. It just want to exhaust the traders so that it can go without the traders in it. And I'm in a very big loss. Even after some time, the account is in zero, which happens of course. But then I found it again with $58.21. So I'm going to continue with drift switch index 20. So this drift switch index 20 is not that volatile, but however, I'm just going to try to make sure that I can gain a little bit of profit, and then you can also gain the knowledge and the skill of trading using simple price action strategies. So currently I've drawn the support and the resistance levels is marked by those two shadow zones. So these two shadow zones will help you understand where the price is coming from and the way the price is going. And then I've drawn the two support areas of confluence. Those are the resistance and the support from a trailing point of view. So this is more like the market is in a rising wedge. As you can see, usually the rising wedge comes from the upside and then it does a little bit of a consolidation and breaks to the downside. So we know that the market is never going to break to the upside since it's a rising wedge. Hence we sell, because the market is currently at the top, or rather at the resistance line. So as you can see, I've executed the market, and let's see if we can maximize on this one. And also another point to note is that resistance that once became a support level. So this is basically all you need. And then after some time, we are in $9 profit. So this isn't very volatile. As you can see, the market did a very big move, but then I didn't get a lot of profit, because this is one of the least volatile markets. So though it happens, at least you mastered the strategy that you can actually use in your own trading. So I'm going to close and maybe look for another trade elsewhere, because this isn't really going as fast as I wanted it to. So I'm going to close. Okay, now I've closed, and then I'm going to step index 400. This is very volatile. As you can see, I've already executed the market. So I'm going to explain to you the reason why I bought at this point. So as you can see, the market just broke to the upside of a shadow zone or a resistance that was created quite a number of times. So after this breakout, we then look for other confirmations. We can also utilize the Bollinger Band strategy, as I showed you in my previous trades, utilizing the Bollinger Band. So it's quite easy. And also using the top-down analysis, I've moved it to 5 minutes to make sure that I can confirm the trade. And as you can see, in the 5-minute time frame, the market touched the lower Bollinger, which means we are looking for buy signals, because the market can not break to the downside of the Bollinger Bands. However, we're going to hold so that we can collect more profit. And then the market is retested. As you can see now, our equity is in $55, which is so devastating, because the profit didn't really make much of a difference since the market first did a retest. But however, I'm pretty sure you got something. I'm pretty sure you understood the concept, and well, at least you understood the concept. And then now we move to volatility 25 index. So volatility 25 is not that volatile, but then at least it's better than drift switch index. So we are going to try to utilize this, to utilize the volatility of this chart. So it's not that volatile, but at least it's better than drift switch, as I've said. So now, as you can see, I drew the fair value gap. As you can see, that fair value gap actually repelled the price not once but twice, as marked by those two arrows. So it means it's actually a very powerful fair value gap that was being respected. It's important because we understand where the price is coming from, and then that shadow zone is marking the resistance or the consolidation of the market. That was actually a point of indecision. And then I've removed the Bollinger Bands so that we can clearly see the chart and the candlesticks so that we can understand thoroughly using pure price action. So as you can see, I'm currently drawing the resistance line. So this marks more like a falling wedge. And the reason why I'm buying at this point is because the market can never break to the downside, as I always say. And also the market made a very big turn after that consolidation is marked by that big candle. But then after some time, the market actually blew the account, as you can see. This is okay, this is so draining. Anyway, we can still utilize this trade. After all, what's important is for you to learn, right? And then now I find it again. I'm actually going to trade this again because, as you can see, it touched the support or the lower trend line, which means it's not going to break to the downside. However, I'm going to utilize it and make sure that I buy at this point so that when it goes up, I will ride the trade and collect much profit. And then as you can see, I don't know what happened, but now our account is in $30, which means I must have been hit by a retest. But however, at least I'm still in the trade, and also I've actually managed to secure a lot of profit. So this is the other disadvantages of going full margin on most trades, because a simple retest or a simple pullback can actually blow your account. But however, I think if you wanna get more, you have to risk more. And then I wouldn't advise you guys, if you are learning to go full margin on any trade that you do, you have to make sure that you understand the concept, apply proper risk management skills, and then as time goes, you can risk more profit. Anyway, let's continue holding and see if we can maximize this account. And then, as you can see, my take profit has been hit. Now our account is in $44, and the account, the price actually broke to the upside, as you can see. So this is what I always say: the falling wedge will always break to the upside. And then now I've closed. Now we are in $539.96. So I'm going to trade the volatility 100. 1 second. So basically, what do you see on this naked chart? Basically, what you can do is you have to make sure that you apply all those concepts of applying the support and resistance. This can always guide you and tell you where the market is coming from and where the market is going. But however, you have to understand the market, or you have to understand where the price is going just by looking at the trade without drawing. But however, I have to draw so that I can make it very, very clear for you guys. So as you can see, the market actually broke to the upside, not only one but two trend lines. So these are two resistances that were actually powerful, and they were all broken down to the upside. So this signals that we are looking for buy signals. So just know that when you get an opportunity at this point, you have to buy. Make sure that you have to buy and you can go full margin, because the market is going to go up for some time, for a very long time, before it starts doing anything else. And now, as you can see, I've executed the market. Let's go. And I'm going to add more positions so that I can collect as much profit as possible. Now we are already in $246 profit. Let's continue holding so that we can maximize. So it's not easy to get a trend or a trade. Sometimes you just have to look at the charts and then see nothing and then close the charts, do something else. So you have to make sure that when you see a tradable setup, you have to make sure that you utilize it to its last cent. And then after some time, we are in $796 profit. This is actually a lot. We've already doubled the account. It's actually safe to close and just be content with the profit that we've collected, or rather you can just continue holding, but it's actually risky. And now it's time to close. As you can see, I've closed, and then I visit the volatility 75. So in the volatility 75, as you can see, I've already drawn the trend lines. This is actually a rising wedge. So as you can see in this video, I traded almost all rising and falling wedges. So this was what the video was about. And also, if you have any setup that you want me to do a video on, just put it in the comment section below, and then I will make sure that I give you a video on that topic. Anyway, as you can see, the market is quite complicated, but as long as we know the principles of a rising wedge, we can never go wrong. But however, the market is at two resistance levels, so it means even though we know that the market is going to do a break to the downside, it is actually going to face some resistance. As you can see, those two shadow zones are marking the two shoulders of a head and shoulder pattern. And then once we understand those things, we can never go wrong. Anyway, I'm going to introduce the Fibonacci retracement. So the Fibonacci can help us understand where the market is going to take some break and then continue in any direction. So basically, we know that the market or the price moves in a certain way whereby it follows the Fibonacci numbers. So the Fibonacci numbers are basically, well, I don't really know, but what I know is some mathematics or whatever. But however, we know that the market is going to face some resistance at this point, because there were many factors that were pointing in a buy position. But however, we know that this is not going to last for a very long time. Since this is a rising wedge, we have to aim for a sell, since the market is going to break to the downside. And then here we are in profit, as you can see. And then currently the price is at a resistance level. Can you see it from the left side? Which means we have to close. It's actually not safe to hold it this long, but however, I was not in the market, so I actually forgot about the trade. Otherwise, I wouldn't have held it this long, because I know that this favors more sales than buys. However, I've closed, and then this is it, guys. This is what I had. So let me know what you think in the comment section below. Please do not forget to subscribe, hit the notification bell so you don't miss on any important update. I will see you in the next video.